Hello everyone, welcome back to the channel, best place for long-term stock investors. Today, we will be talking about number one, Sapura Energy and Serbadk Dynamic Oil and Gas. And number two, Malaysia's low income problem. Now, as a disclaimer, we do not own any shares mentioned on the slides.
So if you're wondering if there's any opportunities during this bearish time in the market, we have something just for you. Scheduled to be on the 17th of April, we're going to cover 3 companies and it will be entitled The Sleeping Giants. We're going to cover PCAM, NCOM, as well as DNO. So if you want to find out any insights about the company, I think you're still in time for the early bird, but if not, then I'll see you on the 17th of April.
All right, John, welcome back. Been a two-week hiatus for you, right?
That's right. Great to be back.
Also, welcome back, Sapura and Serbadk Dynamic.
Oh, yes.
Some of our favorite. Okay, I mean, make sure you all see your favorite stocks. They've been in the news, I think the last week or a couple of weeks. And we wanted to do it, Jonathan and I, but we thought, you'd be the best one to do it, so we waited out for this. Now, what is interesting, obviously, is that both these stocks are down mad.
Yeah.
Whether it's Sapura, you're down something like 95%.
Correct.
And then Serbadk is about 83. So what's interesting is that one is down 93, the other one is down 83. That's an interesting observation. But I do know a little bit about how things came to be. I'll just explain a little bit about the story, then you can add your point.
Sure.
So for those of you who are either too young to remember or you only started investing recently, from somewhere like post-2008 crisis to about 2014, the oil price went up a lot all the way until $140, right?
Correct.
Which is all-time high, essentially.
Yeah.
So a lot of this resulted in bullishness. And Sapura got really bullish, right? They started borrowing money, they're raising rights, and to make acquisitions. Key among them is Seadrill and Newfield. These are the 2 big acquisitions that doubled the amount of stuff that they have on their balance sheet. And of course, timing is so perfect. The minute they acquired it, or at least only a couple of years after they acquired it, bang, oil prices start to drop for many reasons. Key among them would be the shale revolution, right? And so a lot of these assets became unproductive and they are suffering from their failures all the way until today, and that's why the price is down 95%. So just to give a case, we'll start with Sapura first, but today the market cap is about 560 million, which only means that the old market cap used to be 20 billion. In other words, Sapura used to be...
30, not 20.
30, sorry.
Yeah.
Used to be a company on the KLCI index. It was actually a constituent. Right?
Yeah.
So...
I think quite a bit of fall from grace because as we were discussing before this, I think they were ambitious. I mean, I worked with them. They are contractors in some of the projects that I worked in. I even have ex-colleagues who left Shell to join them. And the funny thing about it was that I think what they were trying to be was actually good. I did mention this in a few of my public appearances in communities and all that. But I think at the price they were doing it was not too efficient. I would put it this way. And I think this is something that I wanted to show, to illustrate for those of you who have, just joined the market, during the glove craze of 2020 and 2021. This was probably not on the radar of a lot of investors. A business that is, and they used to be part of the Renault Group as well. If you trace back the history, it used to be Crest Petroleum. Then
for those of y'all who don't know the Renault Group, they were basically, okay, I'll be very careful when I make this comparison. They are very similar in objective to the 1MDB.
Yeah.
In that they were funding, essentially a lot of the things that they needed to fund. So they were big funders of things.
To run the country.
Sapura, Sapura is one of them.
Yeah. So, and I wanted to focus a little bit more about how they run as a business rather than, I know there's a lot of media exposures on, and they talked about, even our former PM was chipping in about how they should save the company and all that. Let's put aside the politics for once and look at it as a business from an investor's point of view, and how efficient were they running it as a business. So in 2013, they had net PPE, or net, in a way, assets of about 5 billion, and they generated roughly about 731 million of cash flow, operating cash flow at that point of view, which makes up roughly about 15% of the asset value. That means they were accreting 15% cash flow based on the value of their asset at that point, PPE at that point of time. 2014, they acquired Seadrill. That made them, and they were, really going to town about it. That made them the world's largest owner of what we call a tender rig fleet, which is it's actually, for those of you not familiar with the industry, it's actually a kind of rig that actually drills offshore. Okay, but these are normally reserved for shallow water. It's not really used for deep water, where it's a different kind of rig. But they were doing it at a Brent crude price of about $100. Here comes the interesting part. The interesting part was that they went to buy an operator, a field operator called Newfield, for additional, I think it was 3 billion at that point of time. So it blew up, the entire PPE actually just blew up. And from then on, you will notice that the cash flow they brought in terms of percentage against their PPE, was getting lower and lower. Now, I did benchmark against Saipem. I didn't put it here. Saipem was bigger than them. But the point I'm trying to illustrate was this. What they were trying to achieve was ambitious. At what price? I think that's the key for us as investors. You are expanding at what price? Are you buying assets on the cheap? What's your margin of safety? And in this case, they did not have a margin of safety, because what we see today is a lot of it was sins in the past. So what I'm trying to uncover here for the investors is that, how do we notice these kind of patterns to avoid, rather than looking at it now and then start. Dato' Anwar, who is currently the CEO, he has a tough job. He used to be my former boss when I was at Shell, but he's trying to unwind a lot of things that has happened in the past. So why I'm using this illustration is to say, okay, as investors, what are the lessons we learn so that we can avoid when we see expansions like this in the future? Because as we all know, oil and gas is a very cyclical business.
100%, yeah.
Yeah. How do we avoid investing into companies like this? And what are our margins of safety?
Will you say that because essentially Sapura is trying to be an oil major?
That's right. They were trying to be an oil major.
Right. And this is in stark contrast to what like Petronas is doing, right? Where Petronas essentially outsources pretty much everything.
Correct.
Right? But Sapura wants to do everything.
It was the reverse, because you as you rightly pointed out, if they had stayed in the EPCIC world, engineering, procurement, construction, installation, and commissioning, without buying new fuel, I think they could have fared slightly better. But they're still a service operator. But the moment you start going into operatorship of a field and all that, it's a new setup, it's bringing new cultures, new way of operating things. How do you keep costs low, and how do you run it against your EPCIC business? I think that's where it got muddled up.
Right.
Yeah.
Okay.
Yeah. And sad to say that when they had to par down their debts, they had to sell the profitable part of the business, which was the operatorship.
Yeah, it's always the case.
Yes. Who wants to buy your losing money business, right? Yeah. Here comes the next part, is that the amount of interest they are paying or continue to pay, it's you look at you just look at the graph, like MJ, you get what I mean. You generate about 1.1 billion in operating cash flow, but you're paying 700 million in interest alone. Can you imagine the kind of tight ship that they have to run? I think this is like super tight, right? I think in Serbadk's case, to their credit, at least they did not leverage to the hilt.
Yeah.
Yeah. And I think where they are in contrast to Sapura's case was that they were billing a lot of revenues, but they're not collecting. So it was more, both face a cash flow problem. One was because of that, which is Sapura. The other one is that they were billing all this, but why were they not collecting?
Yep.
That means were the contracts actually in existence? Because on average, right, whatever profit that they made, in terms of cash flow, I did a rough average of about 5 years. They were only collecting 20% of their profit in cash flow,
Yeah, exactly.
So, I mean, if you run a business, if you run, let's say, a nasi lemak business, right, you make profit on paper, let's say 300 ringgit a day, right, but you're only collecting 20%, which is 60 ringgit a day. Where are you going to roll where are you going to get working capital to roll into your next project and all these kind of things? I think that's where...
I think with Serba as well, with Sapura, you can at least see what's happening, right?
Correct.
The assets and, whatever, right?
Yeah.
Seadrill, I believe you have to fly to Norway.
Norway, but you can see a lot of the rigs
Yeah,
were
they're
actually
here
stationed.
also, right?
Yeah, in this region.
So you can see it, but with the Serba one, as you know, now there's an ongoing case with the Edge, right? About
Yes.
some of their claims.
Yes.
But if the claims from the Edge are to be true, which is that a lot of the, like you say, collection both suppliers and customers may not be real, then it's a very different kind of problem, right?
Correct.
Serba's issues have more to do with perhaps transparency.
Yes.
Sapura is actually very transparent. I know the annual report is also quite a transparent annual report, right?
Yeah.
But theirs is more of a business mistake.
Correct.
They got into something that is wrong.
Yeah.
The only investing lesson I would add here is that I think making if you bought both stocks, let's say,
Correct.
I think you should feel better with the Sapura one.
Yeah.
That's what I think.
Yes.
Because the Sapura one, at least you can say, it's about the intentions were good. They really went in and tried to make a difference and to build something.
Yeah.
But just things didn't pan out.
Correct.
But with Serba's case, there was potentially over-promising.
Yes.
And I think you should feel a lot worse if you bought Serba, even though you probably lose less money with Serba.
One more thing I wanted to add was that even with peak oil prices today, MJ, you have to remember that the business model of both, these are service-based business. These are oil field service-based business. So unlike a company like Hibiscus, which directly benefits in a price increase with crude oil prices, because it's really inventory, I extract it, I sell what is the cost of my extraction against the crude oil price market prices. That's
and
where
how
I make
long
money.
I can suck the oil out, essentially.
Exactly. In
These things
Sapura,
have been built already, right?
Precisely.
Whereas for guys like Sapura and Serba, or at least what Serba intended to do,
yeah.
it's more like they have to find the place, find the.
No, not even them. They don't even.
Sapura don't even do exploration.
They do exploration, but on behest of the client. But I think the point I'm trying to make is
Yeah.
this, MJ, is that it's still reliant on the operators to give them the work.
Yeah. correct.
Whereas Hibiscus itself, it is already an operator, so it benefits directly from prices.
Yeah, correct.
That's why I think what the lessons I want to add to the investors is that understand the business model well, so that we often just see headlines, price increase, all oil and gas companies should benefit. I think
Yeah.
that's the stark difference I want to add.
Yeah. Okay, guys, we are always on the lookout for really good analysts to add to our exclusive research team. If you want to be part of such a team, all you got to do is just send us your best report on the stock that you like, or maybe that you don't even like, and give the reasons why. Now, the key thing you want to include in the report is not just the financials, which you should do it in Google Doc or Google Sheet format, but also the business qualitative, such as, who is running the show, is he trustworthy or not, the CEO and all that, as well as, what's the potential of the industry, is it good or not, and many of the other things, right? We want the things that cannot be measured as well. So if you're interested in sending the report, just send it to this email right here. Okay, so this is an old problem. This has been in, people have been complaining in Malaysia about this problem, right? We have an income issue and we have a debt issue. The only thing before I start off is that this is actually not a Malaysian problem. This is a global problem. with globalization and, where employers now have, they can scour the world for talent, right? That means that local talent, especially if there's no upskilling, may be left behind. And so that's why you see stagnant income. And of course, when the income is stagnant, then necessarily to, sort of
Elevate.
plaster the lack of income, they need to take on debt. So that's why you see debt is rising as well.
Correct.
So yes, so according to the Star, right, there's actually a lot of jobs right now, but they only offer up to 2,000, which is only slightly 20-30% above the the minimum wage, right? And the areas that are the lowest would be your hotel, your service industry, like hotel,
Which is quite sad, MJ, because those are the ones that work the longest hours actually.
Yeah, that is absolutely true. Manufacturing, sales and marketing. So all the jokes about marketing degrees is kind of half true. And the interesting one is science, right? Sciences.
Yeah.
And I'm not sure what they mean by this, but I would imagine it has to do with, I don't know, research?
No, I
research
think
work?
it's more about the sciences. I think it's things like food sciences, biosciences.
Oh, right.
So
Okay,
biomedical, let's just say, or maybe the chemical industry. But I think it's a gray area because chemical industry could actually be lumped together with engineering as well.
Correct.
So yeah, I think this is a very generalized categorization. So
Okay.
yeah.
So let me see. Yes. So maybe before I move on, like what do you want to add?
No, I think here comes the conundrum, and I think based on our conversations with a lot of people, I think one good point that Peter Lim, our fund manager friend, brought up was actually, have we gotten our human resource policies correctly?
Yeah.
Because if you're talking about skills based, leaning towards something like a TVET or whatever, we should not be benchmarking against this because we should be looking at semi-skilled labor and how much are they going to be paid on an hourly basis or rates. Because in a era of where a degree doesn't really matter these days,
Yeah.
I think the focus on getting the human resource policies correct will determine the rise in income or the rise in the way we portray our USP globally. Because if you're saying that Malaysia is like India, India says you get in a way, engineers at a very cheap rate. That's where the US actually outsource all their call centers because they speak good English over to India or the Philippines, for example. Whereas if Malaysia were to position themselves as a manufacturing hub because it was cheap, in terms of labor, I mean, let's be all honest about it, right? People come here is because it's a cheap manufacturing base. Not so cheap as compared to certain countries like Vietnam, but we have our. So if we get those policies right, I think this is for me just a symptom.
Yeah.
It's the root cause is that have we gotten the policies or way we want to go in terms of human resource correct? I think that's where I want to add, because if you have the demand of FDIs coming into this country saying that they because we have this infrastructure, we have this industry policies in place, people will naturally flock here. And if there's a demand, let's just say we set up an IT hub, or you look at Penang, semiconductor hub, right? They got the policies right. Engineers there are paid like easily 2 to 3 times more than engineers in KL.
Yeah.
You see where I'm coming from? That the salary part is really a symptom of whether you get the core correct. I think that's where I want to add, rather than just looking at the numbers that we see here.
What is interesting is that the difference between SME and corporate is not that big also.
Correct.
If you look at it, right?
Correct. Yeah. I when I was looking at this, MJ, I was remembering my Shell days. When I was a master's graduate, if you get hired to Shell in those days, 2005, fresh grad degree, 2,500. Masters, 3,250. My first pay, basic pay, 3,250 plus allowances, everything, probably about 5K. PhD holder, 3,850. So 600 ringgit more.
Yeah, man.
Yeah.
This is quite crazy. But
Yeah.
income is one thing.
Yeah.
I think with the debt is another
Yes.
thing as well, right? So, yes. What do you see from this chart here?
Actually, I think you brought up the point earlier about when income is low,
Yeah,
but you want to maintain a certain lifestyle. It's a balance sheet.
yeah,
Yeah,
absolutely.
it's a very simple. You run your life based on in a way a balance sheet, man. Whether you gather assets or you gather liability, the money must come from somewhere. And I think where this again boils down to policy. When I look at this, don't forget about the top 20 lah. They know they can sort themselves out lah. But the B40 and the M40, it comes back down to policies again. If you're gonna continue giving handouts, it's only just putting sellotape on the problem or the wound. But if you don't get your policies right, this will be forever a perennial problem. 10 years from today, we don't solve that core issue of maybe enhancing our education, getting TVET skills, better paying, what do you call it, workers in the TVET or semi-skilled, you're still going to see the same. Whether it's in Malaysia or whether it's in Portugal or whether it's in Europe, it's going to be the same. I think that's how I see it. Because if you want to think about household debt, which is the next one, this is where I have a little bit more thoughts, because here we are, the government trying to promote house ownership.
Yeah, man.
And I'm pretty sure you have thoughts because you looked at Singapore, you wrote that blog about HDB housing and all that kind of thing. Are we getting that policy right? Because it's right now about 55% of debts, household debts. So if we are trying to build low-cost housing, is it a concentrated effort or a sporadic effort? And if it's a sporadic effort, what is the measurement to say that is it a good thing when you are trying to get someone who may not even have enough for living expenses trying to own a house?
Yeah, absolutely.
And then when you look at countries like Germany, countries like even Swiss, 90% of their population actually rent rather than trying to force them to buy a house, because it's just it's just ridiculous for them to get a house. What are your thoughts?
I think if you look at, I think a lot of it is psychological.
Yeah.
One, also because, people are always told, like, why pay rent, right? You're just paying off someone else's housing loan, for example. And then you're like wasting money because you're paying money and then you don't own an asset at the end of the day. So that's still going to be really strong.
Correct.
I think that, I don't think that can be reversed. I think it's just so entrenched in our minds that will not go away. The second thing is that Malaysia is still a very big place in that relative to the population. There's still a lot of expansion that's going on. We live in we live very central in
Klang Valley.
Yeah, in Klang Valley. So we may not see that as much, but when you go out into the Cherases and the Cyberjayas of this world,
Correct.
They used to be outskirts, but now when you go there, there's a lot more things happening.
Correct.
But the second thing also is, I think, one, for housing, I don't think the government can really solve it.
Yeah.
It has to do with a lot with the private sector and what they're constructing. And I think over the past 10 years, for whatever reason, there have been for those of you who are in the property segment, you know that there's been an overhang. But what the data shows is that there's been an overhang in the high
more than 500,000.
high value houses. So what that means is that the supply that means a lot of these construction companies are building for rich people.
It's a mismatch. It's a mismatch between what is being demanded on the ground and what is being supplied by the industry.
Because even if you increase the raw material cost and all that, it's not going to be that much more than per square feet versus a normal, let's say, a Prima housing or whatnot, right?
Correct.
They are banking on the fact that we can sell it to rich people so that we can make a profit.
Yes.
Now, that's why ultimately I think it boils down to the private sector. Will there be a group of people, and there probably is already, will there be groups of people, groups of developers and all that willing to say, actually, yes, I would like to make a profit, but I also need to build for society, right? because near my house there's a condo being built, right?
Yeah.
And for them to get the deal, part of their deal, right, to be able to build that is that they must actually beautify the surrounding areas. They must plant flowers. They must create. They actually painted they redid the road. The public roads.
I think there's a word for it. It's called gentrification.
Exactly.
Yeah.
So the mindset of a lot of construction players is it cannot be purely about profit.
Correct.
You actually need to do it. And so in the case of the government, yes, they don't care about profits that much. But then where's the incentive to get the right resources and the right without the profit motive?
Yeah.
So is this correct composition of profit plus actually caring about society? That's when I think it can solve these specific small houses. Secondly, as consumers, as potential house buyers, one thing we need to adjust our mindset to, I think, is we should start accepting smaller houses.
Expectations. It's really expectations. I mean, I was watching this series. I think you guys should go and watch it. It's done by Channel News Asia.
Yeah.
And they were talking about the migration of people from Hong Kong over to the UK. I didn't know they get if you were a Hong Kong citizen prior to 1997, you get an automatic BNO visa.
That means a colony back then.
Yeah, there was a colony back then. So you virtually just go to the UK and it's easy for you to get a visa. And one of the conversations was this honky lady where she moved to, I think, I can't remember where, but somewhere in the UK lah. Crewe, CREWE. So she was saying that houses here are cheap.
Oh, yeah, absolutely.
Yeah, I said you get almost like a bungalow like compared to what they get in Hong Kong, and then I think that's where the reality is, where there is a mismatch in understanding in expectation to what people want here. Because for the life of me, I was very blessed. I used to live in quite a big house. When I moved to KL, I moved into I joke with my
half
wife.
the size, man. Yeah, right.
Pigeonhole into a pigeonhole. But would I want to drive half an hour or even 1 hour in a jam so that I could live in a semi-D house somewhere in the outskirts of KL when a lot of my work center in KL? I wouldn't. But it's a personal choice that a lot of people get, in the sense that they want to have that kind of luxurious living, and yet at the same time the price mismatch. So it's somewhat like what you said, adjustment to expectation.
Yeah. I think we have to start accepting that, I think a lot of Malaysians, they don't realize that they live in very spacious areas.
Yes.
Of course, we're in the Klang Valley region. When I look at the old houses, right?
Oh, yeah.
They're huge, right?
Huge.
Actually.
You go to section 17, section 14.
Exactly.
Oh my God, I tell you.
They're huge. I'm like, wow. So this, but then when you see as things evolve right now, more condos are being built. And so we have to adjust. We have to start another thing that needs to be adjusted also is this idea that a lot of Malaysians, right, they look down on condo living. Right?
Oh, yeah.
They prefer, I prefer landed because maybe they have a garage or whatever whatever reason. And I think we need to get used to condo living. That is one big
I think those guys that have worked overseas in countries like, in Europe or whatever, right? I tell you, when I was stationed in Holland, I got a culture shock. My first time overseas, really like a jakun lah.
Yeah.
Right? But then when you see Dutch living, you see Japanese living, you see Hong Kong living, right? You come back to Malaysia, you feel like a king.
Yeah, I mean, like in Hong Kong, right, they have shifts, for their house.
Yeah, it's
12 hours one person, 12 hours another person, and they have to pay rent on that. And that rent is more expensive than the rent here.
Yeah.
And last thing I would add also, look, if you want a big house and all that, if you want space, then consider getting a job that allows you to work remotely, and then
Correct.
go to Seremban, go stay in Alostar, go stay in wherever.
Yeah.
Then you will get the best of both worlds lah.
Yeah. So if you want to up-level your investing mindset, your investing skills, and you like the kind of content that we have been producing every week, do share this channel with your friends or family members or those colleagues that are longing for this kind of content. Remember to like, share, subscribe, click on that notification bell so that new videos are out specifically for you.
Okay, John, so we move on to the Q&A. This is by Annette. What are warrants really for? Is it safe to buy and sell warrants? And why do company issue warrants, John?
Yeah, I think it's a great question. First, we have to differentiate between what we call company warrants and call warrants.
Yes.
I'm not going to turn this into a documentary about warrants, but call warrants are not issued by the company itself. It's actually by the banks, whereas company warrants are issued by the company. Is it safe to buy? Understand what is warrant as an instrument first, and I think I will start with why do companies issue warrants. Usually, warrants come free. They'll say free, right? Free, but warrants actually have what we call an expiry date. I think in
5 years.
Malaysia, 5 years.
Because it's a European style.
Correct. I just want to say European style warrants. There is an expiry date. So when you buy warrants, it actually gives you a right to exchange an equivalent amount of shares at a certain, what we call a strike price.
Yes, correct.
But if you don't convert that within that 5 years before the expiry, then your warrants are deemed useless. You think of it as a contract, it's an option for you to actually redeem shares at a preferred price, at a preferred strike price.
At a specific date.
Yeah, at a specific date. And I know it's not an accurate representation, but I like to look at warrants is almost like a rights issue. Because for you to get a share in perpetuity, where you are given equity that you own in perpetuity, you have to pay up money.
Right.
And the company doesn't give you an interest rate. So it's not a bond. So I like to look at it as a rights. You buy this right at a certain strike price of where the warrant is going to be.
But the rights, the dilution of the rights happens 5 years.
Correct.
Not immediately.
Precisely.
So how do you think about it as an investor would be if you believe in the company and if you think that the future dilution is worth it for whatever reason, then go for it.
Yeah.
It's as simple as that,
Yes.
right? Warrants are magnifiers of your returns.
Yes.
If it's a good company, it magnifies your returns. If it's a bad company, it magnifies your declines and losses.
That's right.
Because warrants will always be more volatile than the mother share. So usually, and as a result, you need to really understand the company. Because when they issue warrants, they're getting capital in return, right?
Yeah.
So what are they doing with the capital? What is it for? That is the most important thing. And so you have to analyze things like, okay, if I give this set of management money, how have they historically done? Have they managed it properly? That will be the best ways. Although I prefer, if you have to raise capital from investors, I'll just go straight to a rights issue.
Yes.
Personally.
Yeah. Actually, the documentation for the warrants and the rights already state a lot of things. Where I find most people who buy warrants don't actually go and read the circulars to explain the reasoning why they're raising this. The other thing I find, when I first entered into the market, not as an investor, but as a speculator, because I didn't know what I was doing, right? People love to punt because warrants are a fraction of the price. And
yes.
If you buy huge quantities, right? Wow, you go up 10%, then you make a lot because you're making based on scale and quantity. I think I'm not saying I'm not condoning it or whatsoever, but what I'm saying is that understand the instrument. You understand the rules of the game. You want to play this warrant game? Can. Understand that it's an expiry, and obviously when it comes closer to expiry, the price. What in my experience when I go out to Bursa circuits and I teach, right? The sad part is that a lot of investors or retailers who buy into this don't even understand the rules of the game about the expiry and all that kind of thing. And they say, hey, how come my price drop? Yeah, what's the expiry date of the warrant? They can't even answer you, So that's where I hope that.
And then also because they just received the warrants at that.
Yes.
Some of them, right?
Yes.
They just received the warrants so that, hey, what's this?
Yeah.
I mean, just to conclude, I would say that I think for most investors, personally, right, once you get the warrants, I just sell it.
Yeah, same here. I usually try to sell it at a favorable price, and then I'll just buy the mother share.
Yeah, I just relocate into the mother share.
Because the conversion, for me, I mean, I've tried to go through a conversion before. You have to go to the bank, get a banker's draft, go to the share registrar.
And then buy the share.
Exactly,
like you stop your dilution, right? That in that sense.
Yes,
so I think that's one. And then the second thing is that I think for most people, so that's if you receive the warrant. But I think for most people, staying out of warrants is really good. And the reason is because most of you all listening are not full-time investors. So you don't have the time to really look into companies very, very deeply.
Yeah.
And so to get then to give you the confidence to say, yeah, you know, I think I should add on a little bit more quote unquote risk by buying the warrants, right? Like, you know, we own Front Can. Front
Yeah.
Can had warrants,
Correct.
right? We understood the business pretty well, but we still sold it
Correct.
essentially
Yeah.
immediately, right?
Correct.
So that is my 2 cents. And anything else you want to add before we?
I think I've
conclude?
explained all of it.
Okay, guys. If you watched all the way to to now, obviously you've enjoyed the video, and if you enjoyed the video, you are now forced to share this video with your friends and family who might find this useful as well. Don't forget to follow us on our other socials like Instagram, Facebook. We have a Telegram channel for updates, and see you in the next video.